Anyway, Democrats and Republicans still have major differences on how to cut the nation's budget deficit. Joining us for the next 2 hours, you know this already. You heard the... is there any song? Small World might be worse than The Hustle, isn't it? But
yeah, definitely. Small World sticks with you longer.
You keep coming back. It must not bother you that much, but we do play The Hustle for you.
No, I love it. In fact, it's now the most downloaded song in my family's iPod directory now as a result.
I mean, it's even a stretch. Hustle, nussle, it kind of rhymes. There's no T. And anyway, he's a former director of the Office of Management and Budget, also a CNBC contributor. And our friend Don Peebles is here. We haven't seen him in a while. Great to have Don, Chairman and CEO of the Peebles Corporations. He was also part of the President's National Finance Committee. You know about real estate like nobody else, I think, and we're going to need to tap your knowledge on where we are. I imagine a lot of the stuff you're in is a lot better, even though housing continues to struggle.
Well, there's always opportunities in the real estate market. If you're playing the market and are committed to the real estate market, then there are times to buy, times to sell, and times to kind of sit on the sidelines. Now's the time to buy. So
Vegas back yet?
No, not yet.
Not yet.
No, it's going to be a while.
Florida?
Florida's coming back. Florida condos on the ocean are selling.
Did I miss my chance at one? You had some like 3-bedroom, 10th floor ocean front stuff.
All gone.
What?
All gone. The last
Did you call me and tell me that?
I told you to come down and buy, but it may have been too liberal for you down there.
Yeah,
so.
Florida?
Yeah.
Florida?
Well, Miami. Okay. maybe more
Miami.
like Palm Beach, or we'll go up to Central Florida. It gets a little colder up there, but you know,
But Don,
a little more conservative.
What about these realty track numbers that show foreclosures? You could have a 4-year backlog just to work through this because the system has slowed down so much, and in many cases it's taking more than 600 days to process a foreclosure, which means that overhang is going to be pressuring housing prices for a long time to come.
Yeah, you know, but that's when you look at these numbers, you've got to also look at them in terms of their geographic location and what type of product. For example, in Miami or South Florida, the homes at the medium price point off the ocean, more, you know, kind of in the mainland area, those are hard sells. But then the $15 million villas on Fisher Island, they're selling on the ocean. So, you know, the affluent are buying because they see a buying opportunity. So those who can buy, international buyers, they're buying. So, you know, I think that, you know, Washington, D.C. is doing very well on the housing side, too. So it's one of the few markets, actually, that's had a price increase this last quarter. So, you know, I think that you've got to look at these numbers, you know, in Iowa or Idaho, places like that. They're going to be hard sells.
Well, let's just look at the national average, though. We have watched prices come down drastically. And there are some people who have said, okay, maybe the end of this year, maybe as you get into early next year, you start to see the national home prices start to pick up again. But with this overhang, does that get pushed off a little further?
Yeah, it does, because first of all, there's a lot of anxiety in terms of jobs, high unemployment. People are still concerned about, you know, the security of their jobs, and also people are, you know, potential home buyers are concerned the values may go down lower, and then also there's a limitation on trading up, because if you can't sell what you have, you can't trade up. So there's a lot of anxiety, and it's also now you're better off renting. And so people can take the attitude, especially first-time home buyers, take the approach to rent. So I don't think this year is, maybe at the end of this year, first part of next year, that's when we kind of see it begin to bottom out. But that still depends on jobs. Without jobs, the housing market's not going to go anywhere on the national averages anyway.
All right, Nuss, we're not going to default, right?
No, I don't think there's any reason why the government needs to default. In fact, there's more and more talk as a result of Secretary Geithner's extending the deadline, basically, and some of the tools in his toolbox all the way to August 2nd, which was kind of a troublesome issue for the legislators who need pressure in order to come to a deal. But on the back end, it proved to people that you know, the revenue that's coming in while growing will be enough to carry about 60 to 70% of the spending that will continue to happen. And so when you hit the quote-unquote debt ceiling, let's say it's on the 2nd of August, the way Secretary Geithner suggests, the next day, if there is a cliff, the only cliff is about 30 or 40% of the government. So what they're suggesting now is the worst that would happen is some kind of a rolling government shutdown rather than a default. No one's going to default. So that, I think, has changed a little bit of the dynamic in Washington.
Doesn't mean that the cost of borrowing can't go up for the government.
Oh, clearly, that's always a peril. But what it means is that the Secretary is going to have to make a decision, the government's going to have to make a decision about what spending is a priority versus what spending is not. And that's either going to happen in an agreement before the debt ceiling, or it's going to happen the day after they hit the debt ceiling because they can't pay the bills.
I watch, and sometimes I'm surprised that the Republicans in the House and that Boehner seem to be able to sort of exert their will at times. You've got a president who's a Democrat, and you've got the Senate, which is still a Democrat. It looks like a lot of things that Boehner wants, that's going to happen. Why is that? Is it a residual from the election, or?
Well, first of all, anytime you control one of the bodies, you've got control.
Spoiler,
number one,
right? But why the Democrats control one of the bodies?
But the other part of this too is remember
they control two of them. Why?
Because in Washington, if you can control one and you can stop something from happening, in this instance, spending, you have control at the table. So that's the first. The second is that in order to get to this deal, you have to have something that happens, that passes both the House and the Senate and gets to the president. If one stops it, it means that nothing gets there.
There are a bunch of green mailers and black mailers, basically.
Which is why the Biden commission, right, has a lot of hopes pinned to it because it is bicameral. Do you not think that's the best way out?
Well, there's a couple of, you've got the Biden group that's meeting, and that's one. You've got this gang of six, which are the 6 senators that are meeting. You have the leadership who are not at the table yet. The president, the speaker, and the majority leader in the Senate are not yet in any one of these camps. So what they're doing is they're trying to churn up some ideas, some proposals to see if there's any breakthrough at all that can happen, and then the final big 3 will sit down and cobble something out, if something gets cobbled out.
Joe, what are you reading?
I'm thinking I'll make a full screen of the actual thing I'm on to something else. The actual full screen I have the exact assignment. It's in the book. Currently a conflict exists between people who want to reduce the amount of chemicals in the air in order to protect the environment, and those who say it hurts business if we limit the amount of emissions. Where do you? So it was. I'm gonna. So we have it for the next. So I didn't have to paraphrase it.
Yeah, that's good. Interestingly worded. Let's see. Jim and Don are going to be here for the rest of the show. We got a big show still to come this morning. The simulcast of the year. I don't know if you saw.
And now another great quote from Your Teacher Said What? Penelope and I are capitalists. And not just because we've done pretty well out of the capitalist system. We believe that free market capitalism is not only the most powerful engine for human prosperity ever, but also history's strongest force for freedom and human advancement. We believe that productive work, freely exchanged, is a virtue, just like charity freely given. Here's your author and Squawk Box anchor, Joe Kernan.
You would not dispute one part of that, would you, Don?
Not one part of it.
Not one iota.
I couldn't say it better.
You couldn't have. I know that. I'm working on you still. I got a lot of. We've made great progress recently, right? In coming over to the. When you're at the book party, which there will be one, I think I can get you fully on board. And
I've always been a capitalist.
Then me, you, and your wife can all be on the same side of it. Right?
At least no politics, right?
Yeah, exactly.
Well, look, I've always been a capitalist. I'm always a big believer in the free market system.
Do you worry about the treatment of capitalism when we start after a break like we saw 2 years ago, and everything's brought up again? You'll see quotes from Ariane or on Time Mag. Is capitalism dead? Unfettered capitalism is the same as communism. You see things like that. We have to relearn this again and again. 300 years of prosperity. And it's still an open question in a lot of people's minds. Does that worry you?
Well, it worries me a little bit, but the American people responded to it this last election cycle. The average American who's out of work clearly understands that in order for them to have a job, businesses have to have an environment where they can do business and operate. people who have jobs, they know that if the business does not do well, if the business owners have to pay more in taxes or their costs go up, they're going to have to cut somewhere else. And so they get that, and I think they're responding to it. So the class warfare rhetoric is not working as much. Now, look, we can look at, there's certain elements of business and capitalism where there's a lot of abuse, and there's abuse to the average consumer and the average citizen, and that shouldn't be tolerated.
Right. I'd ask you, but I don't know.
Well, no, I think Don's right.
Yeah.
I think he's right. The only thing I would suggest is that the last election didn't decide anything, except it decided what the American people didn't like. It didn't decide what they liked.
Or what we need.
It decided what they were against.
Yeah.
So we agree, but I'm just saying, I don't think they said the Republicans win because they're for something. I think they said we're against what's happening in Washington.
Right. They didn't like what was going on and want to change.
Exactly.
And they didn't know what kind of change, but they want to change.
They're still working on that.
In American politics.
Yeah.
We're going to talk more about that in just a minute. Up next, Democrats and Republicans still far apart on how to cut the budget deficit. We have Congressman Jeb Hensarling and Minority Whip Steny Hoyer. They're both here to talk these issues and much more. Squawk will be right back.
I'm with you on this one. That ruined that song, Paul.
It's funny. I was in Washington the other day. I was running, jogging, and there was a poster for DCFC like in concert next month.
June here.
And I almost emailed you and said we got to bring the show down.
That's an idea.
Wait, aren't we going down there anyway?
Maybe.
When is it?
I don't know because the timing's exactly right. But
We're going up for the jobs report next month.
June
we could-
in the city too here, I think.
Oh, really?
I think at one of the ballrooms in then in Boys. Yeah, let's take. That's a good idea, but that'd be an excuse where I'd agree to go to Washington for that one.
Jobs Friday, not so much.
Greenspan,
but Def Cab, yes.
All right, let's take a look at some stocks to watch. Cisco is getting downgraded by a couple of different places. These kind of downgrades may not be that productive, obviously, after the company acknowledged that it was going to be a lousy quarter that they're in compared to expectations. The target was cut at Canaccord Genuity to 20 from 24, downgraded to hold, and at R.W. Baer, downgraded to neutral. The company says while Cisco third quarter met expectations, the fourth will not. Symantec upgraded to neutral from underperform at Bank of America Merrill Lynch. The target increased to 22 from 18. Vail Resorts downgraded to neutral from buy at Bank of America Merrill Lynch. Target cut to 55 from 57. And CVS Caremark upgraded to buy from neutral at Bank of America Merrill Lynch. And the target was increased to 45 from 36. I guess, instead of stocks to watch today, I would have probably done commodities to watch. If you look at it right now, there's oil after a drubbing yesterday, down again. Gold, look at the top of your screen, down 15, under 1,500. Silver, down another $2.50. Copper also down.
This
is an exodus at this point.
Well, it's you had a couple of things happening. Not only is the euro under pressure again today, you see it at 141.72, but also China raising the interest requirements that banks are going to have to hold again, trying to tamp down inflation, and all those things adding up and making this for a pretty wild morning.
Right. Stockpiles of gasoline here in the States were up yesterday. I mean, a bunch of different factors. The dollar at a 3-week high. I mean, it's just all being unwound. We didn't get a chance, Jim and Don, to talk about the budget with Hoyer and Hensarling, but I mean, what do you see happening?
They're talking past each other. That was clear from that interview.
They do that a lot.
Timing's everything, Carl. I mean, this is the challenge. When Geithner said August 2nd, it took the pressure off all of this negotiation. So guess what's going to happen? This is going to go to August 1st, at least.
But the thinking was, well, it's a good thing he pushed it back because the conversation is so intense. We're going to need that much time to put this together.
It was a good thing for the markets, I suppose, but it was not a good thing for the political market in Washington.
We're still going to do it in the fourth quarter.
It sure seems that way, which collides completely into the next budget battle that we just saw in March is going to happen yet again, both either going into August or September and October again. So this is just going to happen all over.
We're going to have to do this, Don, as the heat over 2012 heats up, right? We got Romney giving a big speech today about health care. Everyone wonders about Daniels. Who do you think Democrats want to run against, and who do you think they will run against?
I think the president can beat any of the Republicans that are contemplating it publicly right now. There is not a Republican candidate that we've heard about that could beat.
Not Daniels?
No. The president's, the president's had some significant success, and also, in order to beat and unseat an incumbent president, you have to have a candidate. And there is not one there.
There was no Bill Clinton at this time, and when he was going to run against, the first H.W. Bush had a 92% approval rating, which is nowhere close to that right now.
Even President Obama wasn't even.
Yeah, even President Obama wasn't around.
President Obama.
So there's still a lot of time.
He's a better candidate. Again,
he didn't have 9% unemployment either. Where's that going to be in 2012?
It's not going to be in the 7s, so somewhere in the 8s.
Well,
and that's going to be an anchor. And that's going to be tough. That may be the worst candidate to run against the president is unemployment. So I don't disagree with you that there's no Republican right now that's able to beat him, but that doesn't mean that isn't going to change.
Do we think that Donald Trump can beat Barack Obama?
Don't put up a red herring. No one's talking about that.
Or do we think that Mike Huckabee or
I think Daniels.
But what if Christie can really be talked into it?
Right.
He says no.
I don't think he will, but I think a Daniels could. I think a Daniels could.
Wait a minute. But the president has learned for 4 years. He's running as an experienced leader. He has had some very significant success. He is going to be very tough to beat. I ran into a friend of mine at the airport who was a top Republican Party official for many years, and I asked him who were they going to find a candidate to make this a competitive race, and he said that the president looked very strong right now.
Yeah, sure. I mean, the polls that came out this week, though, that showed his incredible approval for what he just did in catching bin Laden and taking care of that show a massive upswing. But at the same time, those same polls show that they were very unhappy, that people are very unhappy with the domestic policy. And that's the question is, does that become a bigger problem?
It's economics.
Yeah.
And I think that I think we'll see some progress, but I think there's not a candidate that the American people are going to feel so strongly about. And that's
yeah. It's always the case when you're going up against a strong incumbent.
The independents aren't back.
A strong, charismatic, hard-working.
All right, sell. Billion
dollar fundraiser.
Sound like me with the book.
It's just going to be real tough. You're going to
he lost
with no primary opposition.
The independents aren't back. Smell the coffee.
They got to go somewhere else.
I know they do, but they have not come back.
You should run. After your book tour, maybe you should run.
I'm not. I don't think it's the right time for me. I really don't.
Well, if Christie runs, then
neither do any of us.
When we come back, grilling big oil. We have a preview of today's Senate hearing about the energy tax breaks, and then Senator Richard Shelby will tell us what he wants to hear from Fed Chairman Bernanke about this other hearing on Dodd-Frank today. Plus, one group's efforts to make sure capitalism stays in the classroom. Squaw continues in just a moment.
She's writing, she's weaving, conceiving a plot. It quickens, it thickens, you can't put it down now. It takes you, it shakes you, it makes you lose your thought. But you're kind.
What about Bob? Yeah. Sorry, we're trying that. I was kidding about the groundbreaking. Richard Dreyfuss, what about Bob? He's a psychiatrist trying to help Bill Murray. He walks up, there's a bookshelf. Every book in the bookshelf is Baby Steps. And he walks up, he goes, now where is it? There's a groundbreaking new book out. And it's all that. And he pulls it out and gives it to that's what that. Anyway, welcome back to Squawk Box here on CBC. First in Business Worldwide. I'm Joe Kernan along with Becky Quick and Carl Quintanilla. We have not one, but two guest hosts today. Jim Nussle, a former director of the Office of Management and Budget. He's also a CNBC contributor. And Don Peebles, chairman and CEO of the Peebles Corporation. He was also part of the President's National Finance Committee. We are starting off with the markets because of what is happening again. And a lot of times I was a little bit, I laughed a little when I read that when that first day when silver broke, it was about 2 weeks ago, or gold broke, they said this could portend more volatile times, or at least more dangerous trading. It's like, but it could still go up, it could still go down. But I see what they meant, and that was the beginning of some tremors that have now taken some of these commodities way down. And I guess the stock market is suddenly a commodity, because when the risk trade comes off things like silver, and we get to 33, you start to see equities pulling back as well, which never before. I guess it's QE2 dollar related, whatever. They've all
when
gone.
Oil prices skyrocketed before it moved the market.
Plus, you got to remember what energy has done for the market.
Yeah,
right?
and the S&P.
Energy year to date was up 18% at the beginning of April. It's now up 8%. More than half of the gains are gone for the year in energy. It's just amazing what's happened in just a few
And then you
weeks.
watch the miners too with the gold and silver prices.
Yeah. Meanwhile, Cisco didn't help matters this morning. They did post better than expected third quarter numbers last night, but the company warning that it is going to fare worse this fiscal fourth quarter than Wall Street had feared, projecting nearly flat sales growth. Company is also preparing a round of layoffs around the world, trying to cut their annual expenses by $1 billion. Cisco CEO John Chambers is going to be on Squawk on the Street later on this morning, but you asked a great question earlier, and that is, what are you doing with an extra $1 billion in your cost structure?
You hear about trimming fat, but you're talking about slicing off an arm or a leg at this point, unless you really let things get so far out of control that you didn't need any of this stuff.
Yeah.
I mean, that's a question for John coming up.
Meantime, the Senate Finance Committee holding a hearing with oil and gas industry executives today to discuss ending tax breaks. Eamon Javers joins us this morning from Washington with a preview. The tone I think we're kind of familiar with, whether it's a tobacco hearing or sports baseball players even.
Yeah, that's right, Carl. Let me just give you a sense of the kind of flavor we're expecting. We've already had a fight today over who's un-American and who's not un-American. ConocoPhillips coming out with a statement saying that the Democrats' proposal to strip big oil of its tax breaks is, quote, un-American, unquote. Democrats yesterday hollering about that, saying they want an apology from the oil company for calling them un-American. So you get a sense that people are really taking umbrage here even before the hearing starts. That gives you a sense of where we're going today. But take a look at this list of what Democrats want, and we'll tick through some of these tax breaks that they're trying to eliminate from big oil, starting with the change in foreign tax credit rules that also like to limit domestic manufacturing deductions for big oil, limit intangible drilling deductions for big oil, and limit the percentage depletion allowance that big oil gets. All of that, the Democrats say, will save the taxpayers $21 billion over 10 years. And yesterday, Democrats took to the Exxon station here on Capitol Hill to denounce big oil, and New York Senator Chuck Schumer gave us a taste of what to expect today. Take a listen to what he had to say.
When the average motorist pulls up at that pump, they're hit with a double whammy. The high price of gasoline, and then some of their tax dollars are going to subsidize ExxonMobil and Chevron and Conoco. It is incredible. These subsidies were passed when the price of oil was $17 a barrel, when you needed some incentive for exploration.
Now, guys, the hearing starts at 9 o'clock in the Senate Finance Committee. We'll be there, and we'll bring you all the good stuff as it comes. Back to you.
All right, Eamon, thank you very much. We'll be watching that. We'll also be watching Fed Chairman Ben Bernanke, who later this morning is going to be testifying at a Senate hearing on Dodd-Frank oversight and regulating systemic risk. Joining us right now is Senator Richard Shelby of Alabama. He is the ranking member of the Banking Committee, which is holding that hearing today. Senator, we appreciate your time before this morning today.
Thank you.
We have a lot of questions about what's been happening, and obviously it's playing out in the markets right now. Are you convinced that the Fed is taking the right tack, and how quickly would you like to see QE2 not only come to an end, but the end of the balance sheet that's been built up?
Well, the sooner the better, I believe. The Fed has basically been printing a lot of money in the last few months, $600 billion more. Their balance sheet is loaded. They have approximately $2.5 to $3 trillion in assets. I don't know what the portfolio looks like, but the Fed has never, to my knowledge, had this kind of portfolio. They cannot continue to do this, and what they've been doing is buying up the securities from the government, helping fund the government as they continue to borrow. There has to be an end to this.
You know, Ben Bernanke has said that the inflation that we've seen is transitory, and if you watch the action over the last couple of weeks, he could be right. There have been a lot of skeptics, but do you agree with what the bank's done to this point, at least to get us through the toughest times of the financial hardships?
Well, I'm not sure about that. There are a lot of contrarians there, and I probably would be one of them. When you're borrowing temporarily, he says just a transition period. You're printing money and you're buying securities. this is going to come to an end, and what we've got to do is worry about what kind of soft landing we're going to have here, or will this be a real jolt in the marketplace? The Fed was experimenting here. They wouldn't use the term, but I think that's what a lot of economists have thought, and it's just not sound public policy, I believe, monetary policy.
What do you think would have happened if the Fed hadn't stepped in to begin with? Senator?
I have no sound.
Senator, I'm not sure if you can hear us right now. It sounded like we lost the audio. Maybe we can get that back up and running again. But Jim Nussle, Don Peebles, he's talking about the skepticism of the Fed. And this has been a huge question because obviously we don't know what would have happened if the Fed had not stepped in to begin with. Would, first of all, either of you say that you've agreed with what the Fed's done to this point, and what do you think needs to happen next?
The House drilled down on this question, and they asked Bernanke straight out, did this create any jobs? And how can you demonstrate what practically has happened to the economy as a result of this policy? And I think that, you know, it's happened. So you can't go back and say, well, all right, should it have happened? Did it? It happened. So, but what have we learned? Did it create any jobs? What did it do practically for the economy?
Did it save jobs that might have been lost otherwise?
Well, and this whole saved jobs, you know, that's something that's come out of the White House in the last couple of years. Saved jobs is just as hard to pin down. But I do think the Senate is going to drill down a lot more on this whole thing about, did it do anything practically for the economy? Did it create any jobs? Has it given us any boost?
Senator, what's the most important issue that you'd like to hear from Ben Bernanke today? We're still going back and trying to figure out what happened, but we have a lot of questions about what the future is, too.
Well, if we knew what the future would be, that would be great. I don't believe the chairman of the Fed knows either. I said earlier that I believe that during the QE2 era, which they're trying to end now, I hope, they were doing some experimenting. They were printing money, pumping up the market, but as that comes to an end, we've got to figure out what's next. The Fed's got so many rabbits in their pockets, and I don't know how many they have left.
Senator, do you think they should have done nothing?
I think myself that we would be better off in the long run. What they're doing things temporarily, and then when it ends, you got the real problem there. I don't believe that the QE2 has created a lot of jobs. It may have pumped up some the government, you know, securities, in other words, creating a market to buy them and so forth, but that's got to come to an end, and when it does, where are we and where is the Fed with the balance sheet loaded?
Wasn't the thought, Senator, that this activity by the Fed was going to save more of a catastrophic event and transition us into a free enterprise or a more private sector role, which is now happening? And we have to see how that works as well. But it is now transitioning into the private sector, letting the private sector take over and fill the void.
Well, it could have done that 6 months ago. A lot of economists thought that would have been the way to go, because I'm going to go back to this again. The balance sheet of the Fed is very important. It is loaded now. When are they going to start deleveraging that balance sheet? What's going to happen then? How are they going to do it? I don't believe the Fed knows yet.
Yeah, I doubt you'll get an answer from the chairman today. He's been pressed quite a bit on that question. What he might tell you is what he'd be looking for in order to begin winding that balance sheet down. Would that make you feel better at least?
I don't know if it'll make me feel better. What would make me feel better when we have strong monetary policy and we see that there's a correlation between what the Fed is doing and the economy's growing. I don't think we've really seen that yet.
All right, Senator, we want to thank you very much again for joining us before this hearing later this morning, and we appreciate your time.
Thanks.
All right, coming up, a string of economic reports that could sway the markets or get steamrolled by the exiting commodities. First, though, keeping capitalism in the classroom. How much would you pay to make sure capitalism doesn't get lost between math, science, and keggers? John Allison, business professor at Wake Forest University and the former CEO of BB&T, will be our special guest next. Squawk Boss will be right back.
Getting ready for a big rush of economic data. We're going to have retail sales in about 30 seconds, producer prices as well, jobless claims. Rick Santelli is at the CME Group in Chicago. Steve Leisman's here in studio. And in New York this morning, economist Bob Brusca joins us to walk through this slew of data. Rick, I guess I wonder what you think is more worrisome or potentially worrisome, and the inflation numbers, or maybe a repeat of some of the weak jobless claims numbers we've had lately.
I think retail sales, far and away, in my opinion, is going to be the most important. It seemed like everything changed after we started to get the dismal outlook for Q1 GDP, and then it came to fruition. All right, here we go. Jobless claims moved down from 478,000 to 434,000. Continuing claims moved from an upwardly revised 3.75, well, pretty much lateral 3.75. Producer price is up 0.8%. Headline. Strip out the all-important food and energy, and it's up 0.3. Both those are hotter than expected. We'll get to the year-over-year in a minute. Retail sales up 0.5. Headline. Strip out autos, it's up 0.6. Strip out autos and gas, it's only up 0.2%. But there are positive revisions across the spectrum on last month's retail sales, and let's revisit those year-over-year inflation. Headline 2.1, a little hotter than what we've been looking at, which has been under 2%, but kind of expected. And if you look at that's year-over-year on core. If you look at headline, that's 6.8. That's a full percent higher than our last look at headline on a year-over-year basis. So those are all significant. What's the aftermath in the marketplace? Well, you're not seeing a whole lot in terms of interest rates. They were pretty much priced to perfection here, and the fact that retail sales, you close your eyes and you think, well, maybe ex-autos and gas, it was a little weak, but all in all, no huge surprises. It almost nullified the inflation, which was a little hotter. Maybe the reason for that is we're a little bit more worried about growth at this point in time, and I'll be interested to hear everybody else's opinions on that. Equities, they're a little bit lower. You're now down 62 in the pre-opening equities, and the dollar index actually strengthened just a smidge from about 1/4 cent to, well, actually fractional improvement at best. Back to you.
All right, Rick, thanks very much. Let's get some more reaction right now. Steve, you were looking through these numbers, and I heard you say, a couple of times as you were watching some of these come through. It's hard to say that this is information that's going to push us too much one direction or the other. Jobless claims in particular, down 44,000, but still 434,000.
The first part of was what a great job Rick did distilling all the data. I mean, he was just throwing it right into the right context. And I think the most important thing he says is this debate that's out there, is this something that makes me more worried about growth or more worried about inflation?
Yeah.
And I look at the PPI numbers, and a little hotter than expected, and you have to be worried about that story right there. Look at the retail sales numbers, though. I take out
gasoline
autos.
Prices, too.
It's a lot of it's autos. Where was that number there? 2.7 on gasoline station sales. Like the revisions. We talked about that, by the way, last month. The discord between what the auto companies were saying and what the government was reporting. So that came back a little better. Positive revisions, probably going to help boost up the Q1 GDP numbers that was out there. But general merchandise. It looks like in this report, contrary to some of the other reports we've seen, the higher gas prices has given a hit to consumers and their spending elsewhere. Jobless claims came down, but not maybe as much as some people would have hoped, given what they thought was technical distortions. Goldman Sachs out with an interesting report. So 478. I have to say, if I have to make a decision, I think I'm still going to say on the side of tepid growth, and that's really a 2 to 2.5% sense of growth from these three numbers combined. But really, you have to go through and do more parsing here.
Jim, we've been riding high since last week when we got the jobs number on Friday, showing better than expected numbers, at least on the jobs number itself, not on unemployment. But what do you take away from this in terms of what the economy
I look at it, we were just having the conversation about how this affects the debate in Washington and the political calculus for next year and the elections. I mean, none of this yet shows the kind of growth and job creation that either puts the president in a position of strength, A, or B, takes the pressure off Congress to create jobs and continue to reform the tax code and try and go for growth that didn't happen as a result of QE2 and what happened with the Fed. So I think as a precursor to this debate today on Capitol Hill and the hearing, I think this demonstrates that nothing yet positive has happened enough that takes the pressure off Congress to keep looking for that kind of growth.
261, 231, 268. That's the private sector job growth. 3 solid months above, right in that 250 area. What more do you want to be done here? I mean, aren't those strong numbers?
Well, okay, but is that the trend going forward? I mean,
I don't know what the trend is. I'm just saying that's the last 3 months. 261, 231.
And based on today, it doesn't look like that trend continues. But obviously, we're not going to know until the numbers come in. And this is a lagging indicator.
That's the more important thing.
No matter what.
It's not going to tell us the future from the job growth. It's the other stuff.
But it doesn't take the pressure off, which is my point. It doesn't take that pressure off.
What's interesting about these job numbers is part of what we're seeing with the private sector creating jobs, and then we're still seeing, jobless claims come in at high numbers, is because I think we're doing what Joe and his party wants to see happen: smaller government. By necessity, now government's having to downsize a bit because they can't afford to keep making payroll. So I think we're going to see more private sector growth, and I think we'll see public sector decline, as it should be, because these municipal governments are far too big.
Bob, if you look at that picture, private sector job growth is coming in, government jobs are coming down, but where does that leave you in terms of the growth for your GDP forecast?
Well, it's exactly true to say that the past job growth looks pretty good. The problem was that non-manufacturing ISM survey we had last month that was down so sharply, a bottom 5% sort of result, weak employment reading from it. And let's look at claims today. I mean, the claims data, everybody's breathing a sigh of relief, but claims were under 400,000. This is not a good claims number. Yeah, it fell a lot. But what are the signals here? Consumer confidence numbers are still pretty bad. Retail sales, once you take out that, put the autos back in it, but let's look at what happens when you take the gasoline station sales out, because there's such a burst there. There's really not that much spending there. So I have to say that although the non-farm job numbers are pretty good, I kind of worship at the altar of the non-farm job report, but there are a lot of associated reports over the last month that have not been that good. The 190,000 decline in the household report with the rise in the unemployment rate, I think, is something that you don't set aside in this environment. And I think you have to be a little bit more concerned. The problem is we still do not have growth in services spending. The jobs in the economy are in the services sector and in the government sector. We know the government sector, that state and local governments are pairing growth. It's a very weak recovery in that sector. In fact, it's a recession in that sector. And we aren't getting spending in services, which means we're not getting the steady drumbeat of job growth. So you really have to wonder how that's going to keep up. The weak dollar is going to keep the manufacturing sector strong, but that's not the job sector, so that's not the answer.
Well, and Jim, it kind of puts in more clarity the NFIB numbers, which we all wondered, why are they so pessimistic when S&P profits are going to be $100 next year? But CapEx plans down, new jobs plans down, and they're clearly seeing something in these numbers that is coming to the forefront.
Yeah, and that's why I say, for the calculus of policymakers and politicians in Washington, that's what they're going to be concerned about, because they got to run for election with these high unemployment numbers next year, and they're going to have to demonstrate what they're doing in order to create jobs and get that growth back in the economy.
Hey, Steve, can I ask you real quickly, if gas prices come down, which obviously we've watched oil prices drop, and that doesn't translate immediately into lower prices at the pump, but if gas prices come back down pretty quickly, could that be something that could turn things around or really help out at least around the margins?
Absolutely. And people sort of, I think, underestimate the impact of higher gasoline prices. Think about the knock-on effects. There's a motel somewhere on Route 66 that's waiting for a family to arrive in the summertime. Okay? That family doesn't arrive in the summertime because of high gas prices. That motel, that productive asset of the economy, is idled, and that's what you get recessions from, is the idling of productive assets in the economy. You follow that through, and there's a dramatic effect here. If we can come back relatively quickly, and you also notice, by the way, how important gasoline prices are for consumer confidence. You could put those two guys up together. Confidence goes up and down with gasoline prices.
Oil prices stay below $100, maybe even fall below $90, and a month from now, maybe this looks like a much better scenario.
I think that's true, and it can come back relatively quickly. The longer it lasts, the longer the impacts of it will last.
Rick, were you talking to me?
Yeah, listen, first of all, I wanted to congratulate you on the book, and second, I have an idea. I want to know when you're going to write the sequel called What Did They Say in Washington, okay? And I have the first chapter.
Washington said what?
The more we have spent in recent years, both sides of the aisle, the more it's a fight how to pay for the debt, and of course it's always a fight whether they want to do that, they being the Washington types, by raising taxes. So let me get this straight. They said what? Here we go. They want to continue to spend, and then they want to have the tax increases automatic. automatic, so they don't have to fight anymore. They'll spend and the tax increases will come automatically. We really need to pay attention to this one. You know, if somebody gave you a slice of your favorite pizza every time they punched you in the head, you know, I don't know. That doesn't sound like a good risk-reward profile.
I don't know. They keep hitting you in the head and not giving me any pizza, so.
And you keep coming back.
I was thinking,
It's amazing.
I was thinking Janet Leigh would still be alive if gas prices. She would not have gone on to the Bates Motel. She wouldn't have gone in the shower. He wouldn't have been watching her through the hole in the wall.
It's just like you to come up with that metaphor. I'm thinking of this nice American family with the, you know, in the wood-paneled station wagon, and you're thinking Janet Leigh.
Her and John Gavin would be down in Mexico by now with 400,000. Actually, that was in the
I got two kids in the background, and you got a murder in the shower.
My part, what I didn't understand, I understand that. So you're saying that capitalists are Republicans by definition?
No.
Well, you just said my party. I haven't said any. I haven't said anything about either party.
No, I think the Democrats are capitalists too.
No, but you just. Then how do you know? Why'd you say my?
Okay.
Why'd you say my party?
Because he talks to you in commercial breaks.
Oh, that's why.
All right, Rick, Steve, Bob, guys, thank you very much. We're going to be back here in just a minute. Up next, we're going to be betting on the hedge fund high rollers. They are in Vegas attending the SALT conference, and Gary Kaminsky is in the middle of it all. He'll deal us in on the next round when Squawk comes right back.
Got a whole lot of money.
Want to get some final thoughts with our guest hosts, Don Peebles and Jim Nussel this morning, guys. I would love to talk to both of you, but there's no way you can compete with this amazing 10 or 11 years old.
I'm 11
you
years
are 11
old,
years old.
in 5th grade.
And you've co-authored a book with your dad. Your teacher said what? And now you're going to go on this big media tour over the next couple of days. You're going to be doing a lot of talk shows. Are you ready? Has this show gotten you ready?
Of course I'm ready. I cannot wait. And by the way, the book is about what makes America great and what makes the free markets great. I enjoyed writing it so much. I loved the book, and I bet you will too, because who doesn't want to hear about a $40 ostrich egg and a bunch of other things?
Blake, I loved what you wrote in the book where you said the one lesson I've learned most is to not complain about my homework.
Oh,
yes.
Yeah.
Because this was a lot of work.
Yeah, but I need to admit I still do complain about my homework a little. I mean, I'm a kid. I can't help it. I don't enjoy homework.
One of my favorite parts of the book involves shoelaces and the system that has to happen organically, all by itself on its own, for different manufacturers to get just a shoelace made.
It's from a famous little chapter called I Pencil by Leonard Read, and Milton Friedman used it as an intro to one of his books back in the 80s. And it shows how millions of people acting in their own self-interest result in either a pencil or shoelace. Nobody knows how much to make or what it should be priced at, but it works. It's a sort of an intro to the invisible hand, but we did it with Scott's shoelaces, your little brother.
The invisible hand.
Right. So thank Becky and Carl for letting us shamelessly promote this book, Blake. This is part of capitalism. shameless self-promotion. This is the best example of capitalism that I've seen. And thank the guest hosts for sharing their time with you.
Yes, thank you so much. You guys are great.
You remember who? Jim?
Jim, Don, Jim.
Do you think you're ready to write a new book, another book? And if so, is it going to be with your dad, or are you going to cut him out of the equation next time?
Next time it's going to be Scott's book.
Your brother.
And who knows, it might be your video game teacher said what.
I got a suggestion. How much did he pay you? He's a true capitalist. So
yeah, what's your cut?
Next time, what's your cut? Because otherwise, you can help me with a book.
She gets to go.
I've written a few, and I need all the help I can get. And I know you're about to be a bestseller, the youngest best-selling author.
Thank you. Let's hope.
You know,
she gets to go to private school next year.
The true thing about capitalism is you want your cut 50%. Okay?
Well said, Don. Don,
my
Jim, thank you guys.
50% is Jim, Don, Jim.
All right, we got to go.
Yeah.
Blake, thank you, and we'll talk to you again very soon. That does it for us today. Make sure you join us tomorrow. Right now, it's time for Squawk on the Street.